Welcome to the Wealth Wisdom, where knowledge becomes power and power builds your future.
What if I told you there is a tiny company pushing the frontier of post-quantum security, and its stock just surged over 50% in a week? Or a drone-as-a-service startup that's pivoting into defense, contracts, or a semiconductor firm trying to become the brain of every smart car on the road. Today, I am diving deep into for under-the-radar tech and semiconductor stocks that are showing signs of breakout potential or warning signs you need to watch. We'll walk through these stocks. I'll break down what they do, where they stand financially, what's driving market moves, and what smart investors or curious watchers should keep an eye on. This is not advice to buy or sell, just a commentary, a spotlight. If you're into frontier tech, quantum semis, defense, or high-risk, high-upside plays, stay tuned. Before we dive in, please take a second to hit the like button, share it with your friends, and also subscribe. Please help this video get at least 500 likes. It really helps support the channel and keeps us bringing you the latest market insight. Thank you. Let's begin with Quantum Sci Incorporated, ticker QSI. Quantum Sci is a company focused on proteomics, in particular, next-generation single-molecule protein detection and analysis. In plain terms, they aim to build instruments and platforms that can more precisely detect and quantify individual proteins or biomolecules at extremely high sensitivity. That capability has major implications in diagnostics, life sciences, drug discovery, and personalized medicine. The company is headquartered in the US and trades on NASDAQ under QSI. It's a deep tech biotech analytical tools company, not a classic semiconductor maker, but very technology intensive. In 2025, QSI has posted some interesting numbers. In Q1 2025, its revenue was $842,000, an 84% increase over Q1 2024. In Q2 2025, they reported revenue of $591,000, pushing first half 2025 revenue to about $1.4 million, which represented 33% year-over-year growth. Yet the company is still operating at a loss. Its revenue is very small relative to its costs and R&D spending. In 2024, it generated revenue of $3.06 million, up from $1.08 million in 2023. But losses widened. In 2024, it lost over $100 million. Let's dig into the finances and risk profile. QSI is not yet scaling revenue rapidly. Its numbers are small in absolute terms. Negative margins are expected. They are burning cash as they invest in R&D, commercialization, and product development. A key variable is how much capital they have, and whether they can raise further rounds without excessive dilution. Their entire success depends on delivering on their instrument technology roadmap, getting adoption in life science labs and diagnostics markets, regulatory hurdles, and competition from incumbents. So what does this mean for watchers or investors? QSI could be a moonshot if they succeed. There's a lot of upside, but failure or delays are very real risks. It's more of a high-risk, high-potential biotech tools play. QSI has a consensus target suggesting upside, though targets move. If I were watching QSI closely, I'd watch for any signs of accelerating sales or instrument placements, new capital raises, partnerships or collaborations with big pharma or life science firms, securing regulatory clearances, clinical validation, publishing compelling scientific results, analyst upgrades, or institutional investor interest. QSI is a speculative tech-biotech hybrid play, less safe than a blue chip, but more exciting if execution is good. If you're enjoying these market insights and finding them helpful, please take a moment to like this video and share it with your friends. Thank you. Next up is Indie Semiconductor, ticker Indie. Indie is a semiconductor company focused on providing intelligent systems for automotive, IoT, sensor fusion, and smart mobility applications. Think the brains behind next-gen smart vehicles, processing, sensor control, power management. Indie is US-based and trades on NASDAQ. Their investor site lists quarterly results and corporate updates. They recently moved to acquire automotive perception software leader Emotion 3D, showing their intent to expand into perception vision software. Indie announced second quarter results for the period ended June 30th, 2025. Q2 revenue was $51.6 million with non-GAAP gross margin of 49.1%, both above the midpoint of their outlook. Their revenue is in the hundreds of millions, but the company has been posting net losses. Operating income, interest expenses, and SG&A continue to drag them below profitability. Indie stock is not yet profitable and still burning heavily. However, it also had $192.6 million in cash, and its net debt is $159.9 million. That suggests a decent cushion to navigate challenges, but not unlimited runway if growth stalls. Why watch Indie? Because the auto sector is undergoing a transformation: EVs, autonomy, sensor fusion, AI in vehicles. A firm that positions itself as a key chip systems provider in that transition stands to benefit. If Indie can convert its software acquisitions into integrated solutions, secure design wins with automakers or Tier 1 suppliers, and scale margins, it has room to run. But if competition or execution delays it, it could suffer. If I were watching Indie, I'd track earnings calls, guidance on design wins, margin expansion, revenue growth, partnerships or OEM deals, adoption by car companies or Tier 1 suppliers, integration of the Emotion 3D acquisition, software, hardware synergy, cash burn, financing activity, balance sheet health, reaction to auto sector demand, supply chain issues, semiconductor shortages, and raw material costs. Now let's look at Xenotech, ticker Xena. This is a company making waves with drone and defense initiatives. Xenotech is headquartered in Vancouver, Canada, but trades on NASDAQ under Xena. Xenotech's drumbeat lately has been around its Xenodrone division and a drone-as-a-service model, targeting U.S. defense and government agencies. Instead of just selling drones, they provide drone operations, maintenance, and mission support via subscription-based services. Their models include Xenodrone 1000 and lighter models like IQ Nano, and IQ Square for specialized missions. They're also making international moves. On the manufacturing and go-to-market front, there was a historic executive order fast-tracking Xeno drones. Dual-use commercial plus defense manufacturing. Xenotech's Q to 2025 results are impressive. In Q to 2025, Xenotech pulled into $4 million, a massive 503% increase from just $371,000 in Q to 2024. Over the first half of 2025, revenue hit $3.38 million, up to 151% from $960,000 in the first half of 2024. That kind of growth shows a trend, not a one-off quarter. A big part of this success comes from diversification. Xenotech's Drone-as-a-Service division contributed $1.98 million in the first half of 2025, 60% of total revenue. Meanwhile, their Enterprise SOS division added $1.39 million. This balance shows they're not putting all their eggs in one basket. Their balance sheet is also strong. Cash reserves jumped to $10.9 million as of June 30, 2025, up from $3.75 million at year-end 2024. That gives them plenty of runway to fund growth and pursue new opportunities. Xenotech is showing strong revenue growth, diversified income streams, and a healthy cash position. All signs of real traction in the market. Xena is a speculative catalyst play in emerging defense drone space. Now let's discuss SEALs. Ticker LESS. This is a company combining semiconductor hardware and cryptographic security technology, with an emphasis on post-quantum cryptography, methods designed to resist attacks from future quantum computers. Their offerings include secure microcontrollers, cryptographic toolboxes, and hardware plus software solutions for authentication and identity. They are headquartered in Switzerland with global reach, engaging heavily in R&D, partnerships, and acquisitions. Over the past week, the stock surged over 50%, driven by strategic announcements in post-quantum security. They announced a partnership with Weaken to fight quantum hackers. They also confirmed involvement in a next-gen satellite post-quantum communications mission involving SpaceX-related infrastructure. They recently priced a $60 million equity raise, issuing 15 million shares at a 10% premium to the prior closing price. The goal is to strengthen cash and accelerate their post-quantum roadmap, bringing pro forma cash to an estimated $117 million. They also have a partnership to develop a post-quantum semiconductor personalization center in Spain, projected to generate $25 million in revenue over 3 years beginning in H1 2026. However, LESS dipped after the offering announcement. In 2024, SEAL's revenue was $1 million, down sharply, and losses grew to $21.2 million. The upsides are clear, but so are the risks. Dilution from the equity raise, small revenue base, volatile performance, and many forward-looking initiatives not yet monetized. For watchers, key factors include execution of the Spain Post-Quantum Center, revenue recognition, acquisition integration IC Alps, satellite, communications deals tied to quantum-resistant protocols, financing updates, performance of cryptographic products, and adoption across security, defense, and IoT customers. We've covered for fascinating but volatile names. If you're thinking this is too wild and you want something safer, that's fair. But these are the kinds of stocks where news matters a lot, and small catalysts can move share prices dramatically in either direction. Which of these stocks would you add to your watch list? Remember, this video is informational and educational only, not financial, investment, legal, or tax advice. Always do your own research and consult a qualified advisor before making investment decisions. I'm not recommending you buy or sell any of these stocks. These are commentary and analysis, subject to change. Thanks for sticking with me through QSI, Indie, Xena, and less. If you like frontier tech, quantum semiconductors, drones, or next-gen defense, IoT, these are the kinds of plays you want on your radar, not as core holdings, but as watch list candidates. If you found value here, please like the video, share it with someone who follows tech stocks, and subscribe with notifications so you don't miss the next update. Until next time, stay curious, stay skeptical, and keep an eye on those catalysts. Thanks for watching.